My week started with adding more buying positions to gold when prices came back down to fill the new week opening gap during Asian session on Monday. This was the week we would anticipate CPI news releases, and this was the live trade at that particular moment in time. This is a very good strategy that I use trading news, whereby I do look at regions of liquidity, especially lows and highs before high impact news releases, and then using proper limits, I anticipate prices to come manipulate, attack those regions of liquidity for a further continuation of the trend. In this particular moment in time, I was anticipating more buying opportunities, but I was asking myself, in the next few seconds, CPI could actually come down, grab liquidity for a further move to the upper side, and this is what happened. The numbers did come out positive in terms of long-term inflation at 2.7% on the year-on-year release, but on the month-on-month release, it was actually negative. Now, this gave me further confirmation that could the market start pricing in interest rate cuts as early as now, which means this could potentially mean a positive gold and a weaker dollar, hence the buy limits. This was when the position was triggered around 10 minutes to 5 p.m. Nairobi time. I started putting in my take profits, looking at potential regions of where I would want to cash in on these buying opportunities on gold. At the moment, there were only 3 positions running, and I was looking to bargain something when prices tapped into the regions that I would have wanted. As you can see, prices did tag my take profit, and this was a very blessed trade for me in the financial markets. Moving over to retail sales, once again you will see me execute the same strategy, whereby I do use buy limits and sell limits, especially during news releases, anticipating the prices would come to regions of interest or regions of liquidity for a further continuation to the upper side. At this particular point, I had a position on Aussie dollar, a sell position to be exact, and prices was heading in my direction. It nearly took me out, but stop loss at a proper region. Prices moved in my favor. I did offload some positions. Moving over to the highlight of the week, this was gold. Anticipating retail sales in the next few seconds, I did have my buy limits below 3319.57, and a few seconds to the news release, this is what happened. The data did come out positive for the dollar, but you could ask yourself, was why was I buying? Now, the way I trade news releases is I anticipate that prices will be attracted and manipulate most of the traders, most of the retail traders, for a further continuation of the underlying trend. Now, looking at gold, the trend was to the upper side. The data did come out positive. Yes, prices sold on gold, but looking at the overall direction of the market, I anticipated the prices would buy. Now, looking at a stop loss, when the market starts retracing, this is when I will consider having a stop loss. At this particular point, I did have it below 3309 region, anticipating that if prices do take out 3309, there's a high probability that it will continue moving to the downside. As you can see here, I did offload half of my position size when prices gave me a few pips, and then advance my stop loss to break even and let the trade run. At this particular point, I did close my positions because it was on a Friday. But when Monday opened, prices of gold continued soaring higher and higher. But the most important thing is you live to see another trading week. If you find this episode entertaining, educative, consider subscribing, leave a comment, share. I will see you on the next one.